Good morning, everybody. This is Grant from State of the Spark, and I am so pumped you're here. We've got a brief show for you today, but it's going to be powerful. It's going to be May. That's what we've got going on for you today. For those who don't know the meme, it's the beginning of May, and it's going to be May. And we've got a lot of good stuff for you today. We're going to be covering this market crash. And when I say that, a lot of people think when they hear market crash, they think doom and gloom. We're not going to cover doom and gloom. We're going to cover how Marissa and I have survived and thrived in any sort of market correction. We can't guarantee past performance isn't a guarantee of future performance, but it means we're aware. And we've been through, I remember going through the bubble of the late 90s. I remember going through the crash of the early 2000s. I remember going through 2008 crash. And then I remember going through early pandemic crash. And it's coming. And there's good reasons to believe that, whether it's this year or whether it's next year or whether it's another 10 years. We've had 10 years of a bull run, which is crazy. But we're going to touch very briefly on what we're doing and what we're buying, not financial advice. And we're going to be covering that a little bit and how you can prepare your business, your mind, your community, so that you can ultimately protect your economy. And for those who don't know, economics, the word economics comes from a Greek root, a koinonomio, and it's basically the household steward, the one stewarded with taking care of the house. And your household is not just your household. We know from blended families today, your household is your entire community. So if you can actually be a point of light, a point of intelligent support as this market correction is coming, you can be taking care of your economics, taking care of your koinonomio, taking care of your house, your community. We're going to talk a little bit about that and basically, Mike, 5 quick focal points for you in prep, because I think it's kind of imminent. Within the next 3 to 5 months, I think we're going to see some serious movement the opposite direction in the market. So I want you to be prepared. I'm going to give you what I'm buying. I'm even going to give you the ticker symbol of what I'm buying and then where I'm moving my money, where money is moving. And then some tips on how to manage your business, how to manage your relationships, and how to prepare mentally. So we're going to cover that. But before that, that seems heavy, but it's not. I don't mean it to be heavy. I mean it to be a collaboration between you and I on how we're going to help other people be massively mentally and financially prepared for this market shift. It's going to happen when we don't know, but the elements are in place for every market correction that's coming. Before that, we're going to be covering other news, where money is flowing. We can show you that. We've got a link for you so you can see where the money is flowing. We're going to be talking about what's going on in the marketplace in general real quick. And then we're going to be talking about it's gonna be May conjunction going on in the eastern sky in the mornings in the northern hemisphere. It's a beautiful line that kind of goes from lower left to upper right. We're going to be covering that. But before any of that craziness, we're going to be covering other news or morning cup of gratitude. We're going to be covering a morning cup of gratitude. Let's talk about it. What are you grateful for? I am grateful for a super productive weekend. Marissa and I both had very productive weekends. She did a lot of house stuff. She took care of the property. I actually was able to get a lot of work done on my NFTs, which I'll share in a second, in the cryptoverse, with our crypto project on bringing decentralized finance and mentoring. So basically funding and mentoring to low-income, underdeveloped, minority or disadvantaged or underadvantaged people with their business ideas in the Web3 and crypto space. We had a lot of good conversations with people. So I'm grateful for the network I'm building in that space. I'm grateful for my friend Jarrett Carpenter. I'm grateful for Joe Childs. I'm grateful for MetaMoms. It's a group we follow on in Twitter. And a lot of the support community that we spent a lot of time chatting, supporting one another, but also learning from one another. So I'm very grateful for that. I'm very grateful for a restful weekend. I'm grateful for my reading habit this morning. It was really, really good reading and study this morning. That's what I'm grateful for. What are you grateful for? I want to hear in the comments, do you really have gratitude if you are not sharing that gratitude with other people? So this morning, Throughout this show, I want to hear from you, and I'm going to post here. Tell me what you're grateful for. Listen, we're going to be talking about heavy stuff. If we talk about the market, if we talk about art, if we talk about what's going on and how to prepare for a market correction, that could cause a lot of stress in people. But if you have a heart of gratitude, if you have a heart of gratefulness, as you'll see in my steps of the focal points, the 5 focal points I want you to be focused on as we prepare for a market correction. As you see these, you have to approach these with a heart of openness and a heart of gratitude. You cannot let this stuff get you down. I'm telling you this right now. I'll tell you this right here and now. When the market corrects, I watch I was again in the early 2001 market correction and in the 2008 market correction, there were 2 types of people. One type of person got down in the mouth. Woe is me. I'm totally stuck. This is absolutely frightening. They got sucked into their heart of fear and scarcity. Those people have a mental shutdown. And those people who have resources don't really want to work with those people because they bring stuff down. But those who are not toxically positive, but who are going, we're going to get through this and I can work hard and get this thing done, and who aren't down in the mouth, who bring joy and laughter and community to that. Again, not toxic positivity, just joy to their world. They will have a much higher possibility of surviving the market correction. So we're going to be talking about that. So have a heart of gratitude. Post your comments. Post what you're grateful for today in the comments below. And I just want to affirm those to you. Let's talk about other news. In other news, it's going to be May conjunction. Marissa always sings at May 1st, and I don't know what the heck she's talking about. We'll be driving in the car, and she'll just go, it's going to be May. And obviously, it's a in sync parody on May 1st. It's May now. Welcome to May. Can you believe this? January, February, March, April, May. This is me and Marissa's anniversary month. We were married 11 years this year. We're planning for a massive anniversary trip next year. But if you look in the eastern sky, if you're in the northern hemisphere and you look in the eastern sky just before sunrise, you will see a very bright star. That's not actually a star. That's the planet Jupiter. And I mentioned this about a week ago, but it is so gorgeous. I saw it this morning so clearly that I want to reaffirm this is a once every 17-year event. Hopefully, that's how long it is between market corrections, but probably not. But it will definitely be that long before you see this conjunction in the eastern sky. Now, if you're in the southern hemisphere, you'll see this in a line that has a different diagonal. But in the northern hemisphere, just before sunrise, you can see Jupiter and Venus. Those are the 2 brightest ones, lowest on the horizon. They're low left on the horizon. And if you look at in a line to the upper right, I think you'll see Saturn, and I don't even remember what the other one is off the top of my head. If you know, Google it, post it in the comments for the rest of the viewers so that they know. But if you want to see with the naked eye 2 very beautiful, bright planets in conjunction this morning, look in the eastern sky just before sunrise. I was looking at about 5 this morning out there after my run. Check it out. It is absolutely gorgeous. Once every 17 years, you get to actually elevate and see the celestial event. I dropped the link in the comments below. You can see that article. It gives you just a little bit more detail on what you can see. Let's talk about alpha. I used this word last week, and for those who didn't know, you don't know what alpha means. We're going to talk about a little bit of morning alpha, not really alpha. Let's talk about what's going on in the markets. Why am I talking about what's going on in the markets? In the markets, it's this. If you've watched the show, you know I'm all about personal development. I'm all about freedom. The state of the Spark and the Spark channel is about freedom. You want to experience freedom. I want to experience freedom. And freedom is agency, the ability to do what you want, when you want, so long as it does not violate the rights of others. You want to go out there and just be left alone to do your thing. That takes money and resources. So you have some type of financial freedom. Maybe it's low expenses and you live on the beach. Maybe it's high expenses, but high income. Whatever that is for you, financial freedom has to actually support freedom. If we lived in a goat society, I hate talking about money, but if we lived in a society of goats, it would just be you have a great goat herd, or you have an arrangement that allows you to benefit from a goat herd while you sit on the beach. Whatever that is, it doesn't have to be about money, but it is about freedom and your ability to underwrite your life, as well as sowing seed for the coming generation, improving this world, leaving it better than you found it. So you're going to find me talking more and more about finances, more and more about the marketplace, because I want to give you a heads up when you see people have asked me, Grant, how did you know to invest your money in the market at the beginning of the pandemic? Well, there's principles, right? But I also paid attention to the market. We bought low and sold high. Like that's just what we did. And we came out ahead from our investments in the market. We bought our other property in Cocoa Beach that produces very well for us monthly, or has so far produced pretty well for us monthly. In Cocoa, we bought that in the pandemic. You have to pay attention to these things. And so I want to also share with you what I'm seeing and where I'm seeing it in just a microcosm. So we're not going to spend tons of time on this. And no, we're going to continue to talk about personal development, insight, and vision, and goals, and success. Of course, we're going to talk about this. This is critical. But so many of you cannot talk about those things because you're so worried about finance and money. Let's talk real quick about the market so you know what's going on. Number one, the S&P 500 is down 3%, which is huge. Last Friday, the market fell out of bed. The S&P 500 is down negative 3.5%, and the Dow is down negative 2.77%. I looked this morning, the NASDAQ was started up just a little bit, but it already is being drawn down, and we expect a continued drawdown. Now, that's not the only thing you need to know. I would be remiss. It would be criminal for people not to tell you that Bitcoin is up. Bitcoin is up 2%. And Ethereum is up 1.55%. There was a major crash on the market this weekend on Ethereum network you don't have to know about. It was up the whole time, but a particular cryptocurrency wasn't able to make its way through. Even in spite of that, it's up 1.55%. So the crypto markets look like, so far this morning, they're up a little bit against the traditional markets, which are down very hard relative to themselves. Quick fun fact. The definition of a wallet, so many of you are like, I'm not into crypto. It's not accessible in the least. The definition of a crypto wallet is simply this. It's where you hold your crypto. And you can only hold a particular crypto in its own particular wallet, meaning Bitcoin can only be in a Bitcoin wallet. Ethereum can only be in an Ethereum wallet. And the third principle is this so that you don't lose your money. You can only send a particular crypto to its particular wallet anywhere on the internet. What I mean by that is you can only send Bitcoin to a Bitcoin wallet. You can only send Ethereum to an Ethereum wallet. If you send Bitcoin to an Ethereum wallet, it will burn, disappear, and no one will ever be able to get access to it again. That sounds very frightening, but if you know the definition of the term, a wallet, you'll save your money. How often have I told you that financial freedom comes from financial literacy and basically vocabulary? You cannot walk in what you don't have language for. And if I could tell you about delta and PE ratios as it comes to stocks, you'd probably get a little bit better at trading stocks. If I could tell you what a crypto is, what alpha is, and what a crypto wallet is, you'd probably do a little bit better at investing in crypto wallets. If I told you about DeFi indexes, or if I told you about indexcoop.com, which I'm looking at investing in myself this week, there are their own growing funds, index funds on the crypto market. You might have a shot at doing something a little bit better with your money. That's your alpha for this morning. Let's talk about how much money flowed last year into the crypto market. Let's talk about it. So money is flowing out of the traditional finance market into decentralized world at record rates. Last year, $17 billion disappeared from the traditional market and appeared in crypto markets. 17 billion. Now, that sounds like a lot, but it's less than Twitter, and it's less what Elon is paying to buy Twitter, right? But it's still a significant amount of money, especially when that is direct retail, basically the average Joe. That's our money. When you talk about large markets, quite often it's institutional money and it's not often directly retail money. So it's large chunks of money that are off the marketplace in general. It sounds impressive. But in this case, money is flowing out of traditional finance. Now, why does this matter? Because we're going to talk about the bond situation and how the bond situation is setting us up for a major market correction, but an accelerant to that. There's several accelerants in the traditional markets. But what is another accelerant to this? It's the cash flight to other investments. We'll talk about that in a second. But $17 billion has moved from traditional markets last year into crypto markets. Now, for comparison, Etsy revenues itself, Etsy, the website, Etsy, only had revenues of $700 million last year. Now, if you think about the NFT market, which is redonkulous, It's a redonkulous size. It grew by 21,000% last year. Now, this is the early days, and those numbers are impressive. As we saw the Dows in the early this year in January, they were promising a million% and 300,000%. So we're not fooled by these APYs, but it is impressive to know, and it's just a reference point. And we reference the fact that, dang, a lot is going on in the NFT space. Now, that'll lead me to this point. I launched my art onto the NFT space, and I've been doing this, and I have one-of-ones. I don't have a collection yet. We actually have an investment group that will have an NFT pass coming out soon. I say soon. We're working towards it. We're trying to build it right, so we're building it slower. But on the individual side, I've been doing art, some of my Enso studies, which is kind of what my thing is here. It's a Zen meditation. You can check it out. But I've posted one on OpenSea. I don't have a link for you here. You could find it on my socials. And then I also am experimenting with the Cardano network, posting art and NFTs on the Cardano network. Why? Because to post art on the Ethereum network, for someone to buy that, their gas fees are often to the tune of hundreds of dollars. So those who have money can spend money to make that. But Cardano literally is giving financial identity to the bankless throughout the world. So Cardano's mission is a mission that's closer to my heart, and that is helping the underprivileged in the world get access to the internet and tools. Well, that includes the NFT market, where the average transaction on Cardano is around 50 cents to 80 cents, which is fantastic. Same art, moving the same direction, but $200 on one end, 50 cents on the other end. Can you shake a stick at it if you're getting the same thing? And in the Cardano network and in crypto, you are getting the same thing. So I have one line of artwork going on Cardano. You can check that out. Again, go to my socials, check that out on my Twitter. Follow me on Twitter. I post it there. So I posted that, and I'm here to report it's a little clunky still. The UX and the UI, the apps could get a lot better. But it's easy. If you're an artist, I really recommend you look into NFTs. And if you care about it, let me know. I've already published my own work and my own NFTs out there. And I'll tell you what, we'll do a giveaway for those who comment on this show. I don't care if you're on YouTube. I don't care if you're on Twitter. I don't care where you're at. If you post on this show that you've opened up a Cardano wallet, basically there's a wallet called NAMI, Nami. Go out and get one. Get that wallet, and I will send you a piece of art, an NFT of my own, A, just so you can have the experience, onboard you into the crypto space, but B, you'll actually be the owner of my artwork. You'll have the intellectual property rights, and you'll be able to do what you need with it, or you could give it to somebody else or transfer it away or sell it yourself. It doesn't matter. It will be yours to do with as you please. Post in the comments that you got your wallet. Get a screenshot. Don't show me your addresses and stuff, but get a screenshot that you have the wallet installed, and then do me a favor. Share on Twitter, hey, this is what I'm doing. I'm buying a Grant one-of-one NFT artwork, and I'll drop it to you. So the first person to do that, I'll send you a piece of artwork. Thanks so much. So this cash flight, I got a link for you. I'm talking about crypto and NFTs because of how much money has basically moved out of traditional market last year into the crypto market, which is about $17 billion and growing. It will go much higher and much further as Coinbase gets advanced, as Robinhood gets advanced in crypto. What does this matter? It's affecting the markets. It's acting as an accelerant to the marketplace, which I think is already a bit of a powder keg as it comes to the bond market and how that's going to affect overall traditional markets, as we're starting to see the first signs of starting on last Friday. Go look at the market, open it up, open up your phone, pull up E-Trade or whoever you use, open them up and tell me what the markets did last Friday. Now, I'm not saying it's going to crash and continue to crash. I'm not a bear market guy in the least. I'm a guy that's looking at trends and wants to help you prepare for trends. So let's talk about how you can prepare for the coming market crash. So for those who don't know or didn't see the intro to the show, I was a grown adult back in the original stock market bubble, or the tech bubble of the late 90s. I was graduating high school in 98, and I was already in the job market, but I was looking for work. And no, we weren't all on our phones. We didn't have smartphones. Remember, Steve Jobs didn't announce that till much later. We were on the internet, though, and we were using the internet, not for work. We were using standard desktop apps and software for work. Then the internet bubble collapsed and popped, and we thought, see, that was a fad. And then in 2001, we saw another market crash come, basically with the war in the Middle East. Then we saw another crash in 2008. And by then, I was a manager at a Starbucks. I was working hard, and I had seen some money come and go in the world, and we were watching people get absolutely lose their livelihoods. In fact, at one point at the Starbucks I was managing, I was doing a hiring event. And I said, you know what? I cannot handle all of these applications. Let's just do a group hiring event. And I set everybody in a row and I just did group questions and answers because there was so many applicants. And I remember looking across the way from me, and there was a guy that had worked for the DoD. He had a PhD in security or something along these lines. He was or in criminal justice. He was very well versed. And it dawned on me that people are losing everything. And my principles had saved me again. You see, I was a minimalist and I didn't own a lot of things, and I had zero debt, no debt. I didn't have car debt. I had no consumer debt at all. And all I had was my income from the job, and I was doing very well. Now, at the time, rents were low, right? At the time, mortgages were relatively low. But I learned my lesson pretty quickly. Now, if we look around, we studied what happened back then. And believe it or not, there's a lot going on today that's similar to 2008, but there's a lot going on today that's actually even more similar to 1979. And for those who don't know, and I was born in 1979, so obviously I do not remember, but we learned there's telltales in marketplaces of what went on in 1979. Now, the true core cost of living increase was 2% back then. Basically, that year, the cost of living increase, basically inflation, was about 2% that year. This year, it's 10.7%. Think about that. 2.2% in 1979, 10.7% this year. The real treasury rates back then, basically the cash in the market that's underwriting everything by which the Fed is making decisions on whether to raise interest rates or lower interest rates. Real treasury rates, they sell these treasury bonds, and these treasury bonds are what create the cash injection. And those treasury bonds got to have a decent yield to be appealing so that people are purchasing them. Real treasury rates. In 1979, it was negative 0.8%. That was a tough cookie. Not a lot of people were putting money into that. Today, negative 5.5%. The 10-year bond had its own interest rate, and this was important because this was really the market rate appeal that I just described ahead. There's got to be an interest rate for a company or a municipality to buy a 10-year bond and hold it for 10 years to get their interest rate every single year. It's got to be appealing. So in 1979, the 10-year bond yield was 9.1%. That's pretty decent. So to get out of the market crash of 1979, the 10-year bond yield could be 9.1%. That's what the market was bearing. Today, it's only 2.4%. And because of this, the federal government has actually been loading tons of their own bonds. They basically lowered the interest rate over the last 10 years, which we've seen, which, hey, that's great. We've all gotten into real estate, but they've been overloaded on their 10-year bonds. As of January, February-ish of this year, they stopped buying those bonds. And the market in a stagnation you've seen over the last quarter, and some of the market dips that you've seen over the last quarter have come partially in reaction to the Fed not buying any more bonds. They've stopped buying bonds. More than that, they've now done the interest rate hike. So you've seen them not buying bonds, so there's no new liquidity, and retail markets aren't going to buy these bonds for 2.4%. There's better places to put their money. It's not 9% like it was in the 70s. It's only 2%. I'm not going to move at all. And the federal government was making up the difference by buying it themselves. They've stopped buying it themselves, and they've raised rates. They're on both sides of this deal. And they're haggling with themselves. At some point in the next 3 months or so, most of the voices I am following say the Federal Reserve has to start dumping its own bonds. And it's going to be dumping them at a loss at an interest rate, at an interest rate of 2.4%. So if you're seeing any ups and downs in the market right now, it's just because they just haven't bought anything new in the market and the interest rates have gone up a little bit. What you're going to see next, I believe, not financial advice, but what I'm seeing is I'm preparing for them to actually start selling off their very cheap bonds. They're basically selling them at a loss, and they're going to raise interest rates. Both of those things happen. And you create a situation Okay, I'm gonna say Punjit. Nah, it's Alan. It's not Punjit. That's my dude Alan, I think. I think it's Alan if I remember correctly. Yeah, man. So when you see the Fed start dumping its bonds, which I think is going to happen in the next 3 months or so, and we're going to continue to watch interest rates go up, you're going to see a continued crash in the market, I believe. There's a series of dominoes that occur. Yes, you're right, fam. That's what I'm talking about, man. Good morning, Alan. So this is a pickle that we're finding ourselves in, and this is why I was talking about the flight of cash into the crypto market. So the question is this: are you ready? Are you financially ready? Today's show is not commentary on the market. It's what I'm seeing, and it's about how I am the top 5 focal points I think you should have and be focused on in order to prep for this market correction, which I think is nearly inevitable. Marissa and I are already starting to look at our real estate, so we'll look at that. Boom, boom. Here we go. Warren Buffett takes a swing again. The clown still claiming it doesn't produce anything. Huh, unpack that a little bit for me, Alan. I mean, I think I get what you're saying about, Warren Buffett, but talk to me about the clown takes a swing again, the clown still claiming it doesn't produce anything. We'll have to see it. I'll have to see what you're saying. Unpack that for me if you don't mind. But long story short, are you ready? Mark's, Harvard researcher Max Bazerman found this. If a group of researchers, a group of people were studied, and they basically found that when this group of people was estimating someone else's budget, they created cushion of up to 25 to 50%, a margin of safety. That margin of safety of 25 to 50%, they basically estimated that the cost of goods would be 25 to 50% higher. They estimated that the time it would take would be 25 to 50% higher than their neighbors chose. Then they were asked to estimate their own project, and nearly every single time they estimated exactly what it would take or under budget. They under budgeted the time, they under budgeted the cost. Now, if Marissa's watching the show in the other room, she absolutely knows that I do this all the time. So Alan says, sorry, forgot to add. Boom. Sorry, forgot to add taking a swing at Bitcoin. There we go. Warren Buffett takes a swing again at Bitcoin. The clown still claiming it doesn't produce anything. And this is kind of what I'm getting at, Alan, not entirely for the whole portfolio, but as a hedge, 100%. We're going to talk about that just briefly. So again, Harvard psychologist found that people estimate, when they estimate their own budget, they do not actually account for margin of safety. But when they estimate someone else's budget, they do estimate for margin of safety. So my question for you is this. As you're looking at this potential market crash that I'm talking about, where the Fed has to dump their bonds and raise interest rates at the same time at a radical clip, they have to do it quickly, and the market crashes. Are you ready? Are you in position to handle that? If you are in a position to handle that, great. I'd love to hear from you. How are you in a position to handle that? I'm here to share with you. Today's show is about the top 5 ways I prepare for market corrections. How Marissa and I prepared, or were already prepared for the pandemic correction. We didn't expect the pandemic. No one did. But margin of safety is everything. And this margin of safety concept, if you're not reading Psychology of Money, or if you haven't read it, you need to read it. If you have read it, I suggest you read it again. You need to read the Psychology of Money because it has so many mental principles to build on as you prep for this market correction. And again, the reason for those who are just jumping on the show, I see the numbers jumping up and jumping down, and we have some decent viewers. For those who are just jumping on, the reason I'm talking about money, even though this is largely a personal development show, a show where we help you pursue freedom, you're obviously pursuing financial freedom, and what you cannot handle is a major setback. Those who had a major setback in 2008 were set back for 10 years. It took them about 10 years to recover. Yes, we've had a bull market for the last 10, 12 years. But for those who took a hit, for those whose investments weren't positioned, for those who lost their jobs, it took you years to recover. And for those who were well positioned, I was pretty well positioned at the time. For those who were well positioned at the time, even if you didn't make radical investments, the wealth gap between you and those who took 10 years to recover was significant. In the beginning of the pandemic, Marissa and I were able to invest. A lot of people lost money at the beginning of the pandemic with their businesses and in their income. Marissa and I were able to invest, and we did over 3x on our investment over the time between when we bought it and when we sold it. And then we moved that into a piece of real estate. So in theory, you could actually calculate we did way better And the wealth gap gets much larger, and it doesn't feel like much because I'm still wearing the same Spark shirt. But in terms of investments and cash flow and how we're positioned for this market correction, incremental is exponential. Hear me on that. You can quote me on that. Incremental growth is exponential growth. So we're talking about this because our pursuit is freedom. What's your pursuit? If we're pursuing freedom, we have to have the our economic system. If you pursue freedom, your economic system is not capitalism. It's entrepreneurship, which is a subsect of capitalism. Entrepreneurship isn't just building a business. Entrepreneurship is looking at the world and taking agency and taking ownership of your own wealth. Mercer's doing some major moves for our family right now. We are doing some major moves for our investments right now in prep for this. So my whole purpose about bringing up the market correction, my whole purpose about talking about money on a show when we normally talk about personal development is I want you to be prepared because I am fully convicted. This is happening. This is not financial advice, but I am so convicted. If I were convicted in a religious doctrine, I'd have to share that with you. If I were convicted that you need Zen, you need to practice an Enso, you need to go get out a pen and practice an Enso. Yeah, man, that's good Zen. I would share that with you. Similarly, I'm fully convicted that there's a correction coming, and I got to share that with you. But let's actually talk about what to do. Number one, connect with community. The first thing I would do to protect your wealth is connect with community. You see, economics comes from the Greek word oikonomio, or two Greek words, oikonomio, and it basically means the household steward. You are stewarding over your household. And in our modern society, your household is more than just you if you live alone and rent an apartment. It's more than just your family. It's your family. It's your blended family. It's your community. And when you see a market correct and you need a job, who's going to give you that job? People that know, like, and trust you. If you have a small business and people are cutting their services, who's going to keep their services on with you? Those people who know, like, and trust you. And if you have resources, who are you going to sow into? All the people that will come to you asking for a handout. I had cash in the 2008 correction. I had people asking me for loans. I'm not going to loan to anybody and everybody. I'm only going to loan to people I know, like, and trust. It was the same thing in the beginning of the pandemic. And no, we don't have a ton of cash, but for those who in your intimate circle who know your position, you're going to get asked for help. And you want to make sure that you're doing it in an intelligent way. But if you're on the need help side or if you're on the give help side, hopefully you're on the give help side. The relationship and being engaged with your community is wealth. We could get rid of everything in this society. We could get rid of every aspect of capitalism. And a community would be who's fishing, who's planting, who's hunting, who's gathering. Your community is the most important asset you have. It is wealth because it's also joy. It also bears dividends. It's like an NFT. Community is like an NFT. It has multiple functions, right? It doesn't just serve one purpose. It brings you joy. It brings you fulfillment. It brings you a friend in need when you're down in the mouth. If you need support or encouragement, it's that friend you meet in the park for coffee. It's so many things, but it's also economic security. Number two, review your budget. Now, if you caught what I said about the Harvard psychologist just a moment ago, that people, when they do other people's budgets and other people's estimates on home projects, they usually account for a 25 to 50% cushion. But when they do their own budget and their own estimate, they usually underestimate. So I've got this caveat: review your budget, but review it with somebody else. Let someone else see your financial statement. Do you have a mint.com account where you have all of your expenses in? Are you realistic about how much money you spend out and at DoorDash? Do you need to? For those of you who became a grown-ass adult in the last 5 to 7 years, especially during the pandemic, you think it's normal to eat out or to order DoorDash. No, what used to be normal is going to the grocery store like a real person, not paying an $8 to $12 delivery fee, and cooking your own food at 1/4 the cost of what it takes to order it. Do you have others looking at your budget for real? You're going to give yourself grace where others might not, especially if you know, like, and trust each other. Review your budget, know your expenses, know your income, know what's going on, and know how much pain you can endure. Know your savings accounts. We'll talk about that in a second. So number two is review your budget, but review with others. Number three, cut unnecessary expenses now. Cut expenses now to create margin of safety. Billy Weigel, my guy, gratitude. That's my guy right there, talking about how to prepare for the coming market correction, sir. So number three, cut expenses now. Do you need all the streaming channels or just your favorites? Me and Marissa have Airbnbs, so we keep the top 2 streaming services on all of our Airbnbs and where we're pulling rents. but we don't need all of them, right? Cut your expenses now ahead of time. Number 4, buy things that grow opposite the market. Now, this is where I'm going to give you my buys. Now, this is not financial advice. I am not telling you to do this. In fact, I have to say, I might take a major loss on this. I am shifting most of my traditional holdings within my IRA and out of my IRA, both of them. I am holding Tesla right now. I'm holding Apple right now. I'm holding VFI, well, what used to be VFINX, which was the Vanguard 500 index fund against the S&P 500. I'm looking at, and that's my biggest stock holding. I'm looking at liquidating all that and putting it into the ticker symbol is TBT. Basically, it shorts the bond market by 2x. It's short. Basically, what happened in The Big Short, the movie about what happened in 2008 through 2010, it's doing that as a fund. TBT. I'm looking at it right now. Me and Marissa are going to make some serious judgment calls because our Vanguard 500 has been at an all-time high, but last Friday it dropped by 3%. How many of those drops can we handle? Now, some people say, well, just dollar cost average, buy it as it dips. That could be. Or I could move some of that and buy TBT, which it basically is a fund. It's a fund that shorts the bond market, just like what happened in 2008. Go look it up. Do your own homework. Do your own research. But that's one thing I'm doing. The other thing I'm doing is the thing my man Punjit says, actually Alan said right here. Crypto, man. For those who don't know, you feel like Bitcoin is volatile. That's because within the last 11 years that we've been watching it. Now, we have been watching it for over a decade. But for those who have been watching Bitcoin for the last decade, they've seen when it tanked to 80% 2 times. You saw it tank 80% 2 times, and that was scary. Definitely scary, especially if you sold low. But if you held, what would have happened? You would have 10x'd your money every year, year over year for the last 11 years. Consistently. Now, past performance isn't the ultimate predictor of future performance. But in the early stages of a thing, Bitcoin is still in early stages. And it has grown 10x every year, including, except there's been 1 year that it posted a record low. 1 year in the last 11 years. But within a 12-month cycle, it was back up 10x, including the 80% down markets. So it sounds like that's crazy volatile. No, what's crazy volatile is what's going on in our market right now. And when a Federal Reserve could do whatever they want at any moment, that's chaotic. But when no one can directly manipulate the mechanisms of Bitcoin, yes, there could be whales who buy and sell and create short-term cycles. Withhold cash. In fact, you're going to see institutional investors start buying up large swaths of Bitcoin and stashing it to control supply. That's like the big thing that's going to be happening. But I am still believing that most of my holdings need to be in crypto, A, because of growth, B, because I can stake it at interest rates that can vary. If you're on Anchor Protocol, you're getting about 19.9% interest every single year, which is fantastic. People promise a lot more, but those promises are often hollow if the protocol is tanking, right? If it goes from $10 to $1, but it grew 50%, you lost money, right? But I'm moving more of my money into TBT, more of my money into crypto, Bitcoin and Ethereum primarily, and staking those and getting a return on those. So number 4, my tip is buy things that grow opposite the market. Now, my man, Billy jumps in and says this: the market collapsing potentially should be a welcome opportunity. This is what I'm talking about, to make gains because you're structured in a very purposeful way. You're insulated if you're taking these 5 steps. Cut expenses, always be investing correctly, live below your means, which is how I absolutely live. And then he also says, when people are scared and act accordingly, it may mean they don't have a plan. There's a lot of unknowns. Wealth has a roadmap. It usually isn't just a random jackpot. I like this sentence: wealth has a roadmap. And it does. These cycles are predictable. I can't tell you what day or time, but I could tell you, hey, we're hitting a boiling point. You could stand over the pot and watch it boil and think, I have a good prediction. I shouldn't put my hand in this thing. You might not know if it's going to boil now or in a minute, but you know that maybe I shouldn't put my hand in this thing. Or maybe I should take it off the burner. It's been boiling for a while, right? We can see that. We don't have to know the exact time or moment this thing takes off. So number 1, connect with community, because your community is your economic wealth, no matter what anyone says. If we went to Armageddon, your community would be where it's at. If you just needed a job like in 2008, community will be the ones to hire you. Number 2, review your budget, but have others put their eyes on it so that they have more realistic eyes. Number 3, cut unnecessary expenses right now. Number 4, buy things that grow opposite the market, which for me, do your own research. For me is the ticker symbol TBT and crypto, specifically Bitcoin and Ethereum. Watching this very closely, and I'll also increase my XRP, my Ripple, and my Cardano ADA. That was number 4. Number 5 is the last one. And this is one we're seriously considering. Consider pulling cash out of your assets that are paid by OPM. OPM is other people's money, right? My renters, my asset in Coco and my asset here is paid for by renters, OPM. Consider pulling cash out if there's equity. So we have equity on both of these properties, just a little bit. Our hands are tied on one, but on the other, there's a little bit of equity. We are seriously considering pulling that money out at current interest rates before interest rates get jacked to all-time highs. And because our renters are generally paying for that debt, it's literally cash from their bank into our bank. Now, Grant, you lose your equity. What if the market turns and your properties turn upside down? That is a potential problem. But if I'm making my payments, does the bank care? We have seen the bank call some loans due. So we got to be very careful. Boom. Billy says OPM, that's the acronym we should all be living by. OPM, whether you're doing business transactions or whether other people's money is paying for debt or whether the bank's money is paying for debt, OPM is the acronym you have to know. So my 5th point is, again, not financial advice. It's what I'm considering doing. I'll tell you for certain and with absolute clarity on this show and in our Discord and with our investor group, I'll tell you totally transparently if we actually do this, and I'll tell you the outcome. But my current hypothesis is consider pulling cash out of your assets that are paid by OPM. Should you pull all of your cash? No. But what's going to happen? The Fed's going to raise interest rates. They're going to start dumping their bonds. They haven't done this yet. But they're going to have to start selling their very cheap, inexpensive, negative bonds. And the market, through the domino effect, the market will tank. When the market tanks, real estate will tank. And what's me and Marissa's long game? Real estate income. There's going to be opportunities. Billy said it right here. The market collapsing should be a welcome opportunity to make gains because you're structured in a purposeful way. The trick is people don't have their antenna up. They get comfortable. So with these 5 things, connect with your community, review your budget, cut unnecessary expenses, buy things that grow opposite the market, consider pulling cash out of assets that are paid by OPM. I've got a secret 6th one here for you. I got a secret 6th tip here for you on how to prepare. And if you're just now jumping in, I see the numbers increasing. People are probably on their way to work or something like that. If you're seeing this, watch the replay because we cover a lot of really good stuff. We got a lot of good comments from Billy, from Alan. Absolutely. Check in. But I got a secret 6th one before I let you get to work and start thinking about this week. And I encourage you to do this week. Look at the market. The market is in the tank. It might rally a little bit today. Yay on us, right? But the 5 steps I've already given will help you start to get yourself in alignment this week so that emotionally, mentally, you're prepared for my 6th tip. And it's this. Don't worry. I'm not bringing this up to cause any fear, though I know it will cause fear in some of you. But as Billy said, when people are scared and act accordingly, it's often because they don't have a plan. This is true. Fear and risk equate to the risk taker, not the investment itself. Risk is proportionate to the person because risk is a knowledge gap. I don't know what the market's going to do. The gap between what the market does and what I know is risk. The gap between options tradings and what I know, that's risk. It's the gap. It's not options trading. It's the gap that I have. So I'm the risk. And what Billy is saying here is lacking a plan is risky. Come up with a plan. Do these 5 things. Connect with your community. That sounds silly, but watch the replay on my reasoning for that. Number 2, review your budget, but let someone else review that budget for you and give you feedback. Number 3, cut expenses now. Please do it. Please do it. Me and Marissa are going to look at cutting expenses now and increasing income, which is something she's working on. Number 4, buy things that can grow opposite the market. Number 4, I said 5. Number 4. And number 5, pull cash out of assets. But number 6 is really important. Don't worry. You see, in market corrections, there's something not money related that I love. When markets correct, there's something absolutely not money related that I love. When the pandemic hit, there was something not money related that I absolutely loved. When 2008 happened, there's something not money related that I absolutely loved. It's this. It's clear blue sky thinking. It's a possible reset for you to reapproach your dreams. Me and Marissa took trips. We found ourselves. We became spiritual again. We reconnected with our spirituality. We connected with people. We let life slow down. When the market crashes and corrects, whether or not you're well positioned isn't nearly as important as don't worry. The market will also come back. And if you can at least work or find a way when the market corrects, there's plenty of opportunities out there. So you heard my 5 points, but the 6th is super important. Don't worry, you'll find yourself. Don't worry, you'll be around loved ones. I encourage you to be. Don't worry, you'll connect in a meaningful way with yourself again, with your spirit again. And I encourage that in a deep way. Why are we talking about market corrections? Why are we talking about any of this, Graham? Because the world needs you. No matter what you do today, whether you research some of the ticker symbols I gave you up above, whether you look at crypto, and if you are considering crypto and you are petrified of crypto and don't know anything about it, I am making myself available. Join our Discord. We will onboard you to the cryptocurrency because I absolutely believe it is the ultimate path of agency. Billy's been doing his own experiments. Alan's in our Discord. There's a lot of there's popcorn conversation right now because we're working in the background trying to get our investment group together. We're trying to get it together in place for this market correction. It's happening. Get all of that in the replay above, but we're talking about anything, no matter what you do today. I want you to remember why we're doing all of this and what is the mission. Igniting lives of explosive significance, starting with your own. Have a great day.